Good evening. My name is Shannon Badger, and I am with Badger CPA firm, and I would like to just take a couple of minutes to walk you through the journal entries that we will be making for the PPP loan tracking. These are just a few suggestions. There's definitely more than one way to do this, but I hope you find this helpful. And if you have any questions, feel free to reach out and I will help you the best that I can. So we're in a test environment here for QuickBooks Online. And for the sake of this exercise, we are going to assume that on 4/30, we had a PPP loan deposit of $200,000. Now, two scenarios we'll look at is one, if the funds were deposited into your regular operating checking account. And the other that we will look at is if you had a new bank account created and the PPP funds are in their own bank account. So we'll walk through sort of both examples and how to track the funds. So for the initial deposit, first, we're going to do the example where it goes into your operating checking. So you will open up, we will create a new account. Going to be a bank account, and then what we're going to do is we're actually going to make it a sub account of our primary checking. So let's say this is your main operating account. So a sub account of the operating account, and then you can say PPP loan funds and save and close. And we're going to say there was a $200,000 deposit. And then I would recommend creating a new long-term liability account because the PPP is technically a loan until it's forgiven. So for the sake of the entries, I would start it here. So let's create a new PPP loan payable account here. Long-term liabilities. And I know there's technically a current portion and all that craziness, but for the sake of this, let's just keep it simple. So we're booking a long-term loan, cash, and then we'll save and close. And now I'm going to go to our balance sheet so you can see how it looks. So what we'll have here, and I need to update this by Wednesday, is you will have your primary checking right here, and then this is going to be the sub account that will show you how much of your balance you have in this loan funds account. And then if you scroll down, you'll see down here in your long-term liabilities, you have your loan payable. So now, as you are operating your business and you have qualifying expenses that come out of this primary checking, we will start tracking those between the two accounts. So how we're going to do that is if you have a payroll run, then we are going to take the PPP funds and we're going to transfer them into our checking. And let's say you had a payroll run and it was about $45,000, but maybe only $40,000 were qualified expenses, meaning once you backed off the expenses that do not qualify for the loan, the net was, let's say, $40,000. So you can say qualified expenses for your 5/1 payroll, and then you can book this entry. And then let's also say that we paid rent, and so we're going to take it from our PPP funds, and we're going to reimburse our operating checking, and we're going to say, let's say our rent payment was $10,000. So we'll say 5/1 rent payment, and we'll leave our self-submits there. And I'm going to go ahead and save and close. So what you'll see here on your balance sheet now, sorry, I booked them at 5/1. Let me update that. Now when you go down here, you'll be able to see how much is left in your PPP loan. So you can see that we've transferred over $50,000 of our $200 so far into this checking. And then what I like about this approach is I can actually open this up here, and it's very easy for me to run a summary report for my bank when I give them my summary at the end of the 8-week period to show the deposit, and then I can show every single transfer here for what was spent, and then I'll just keep the backup for these expenses. So that's one approach. The other approach is if the PPP funds were deposited into a separate bank account. So I'm actually going to change this, and we're going to add new, and we're going to add a new bank account, and this will not be a sub account, and we'll just call it, you know, bank name and PPP account. So now that's where the $200,000 deposited. And then for the sake of this exercise, you'll have to ignore kind of our previous entries that we made. I'll go to the balance sheet so I can show you what it looks like. So with this approach, what you'll end up with is the PPP account will be separate. And so you'll end up, so again, you wouldn't have this one down here. So you would just have this bank name, you know, let's say Wells Fargo PPP account, and you would have your funds here. And then similar approach, when you have your expenses, you can actually do an interbank transfer, and you can say, I'm going to take it out of my PPP account. I'm going to fund my operating account for, whoops, sorry, I put it in the wrong bucket. We're going to fund our regular operating account for the $40,000, and we're going to say 5/1 payroll. And then again, similar method, if we then we pay rent, we're going to take it out of our PPP bank account, and we're going to transfer it to our primary checking. We're going to call this 5/1 rent. And then now, when I create this new bank account, my balance sheet will basically have this PPP account balance, and then I've been reimbursing my primary checking. And then when I go into my PPP designated account, again, I have this nice trail where I can easily see everything that's been hit, and I can keep my support, my payroll reports, and my rent check, etc. So you could pay your utilities, your retirement plan, things like that. And so what I would recommend is for every expense that you pay out of your operating account, you identify what portion of that qualifies, and then keep that support, and then just create this transfer for only the qualified expenses only. Lastly, when you get to the end of your 8-week period and you're able to calculate your forgiveness amount, I just want to touch base real quick on how we're going to be removing them from the balance sheet, what I would recommend doing. So for the sake of this exercise, we had a $200,000 loan payable. Let's say that $150,000 of it is forgivable. So we basically need to remove $150,000. So what I would recommend is creating a new account, and this will be the future date. So we'll say end of August. I would create a new account, and I would use the other income type. And for detail type, you can just say other miscellaneous income. And what we're going to put here is say PPP loan forgiveness and non-taxable. And I would put that note there so your tax accountant can see it. And we're going to say we're going to take it out of that PPP loan payable account. And so we're going to take it out of our liability account. And we're going to recognize income for it. But the benefit of using that other income account is, one, we've accomplished moving it off our balance sheet. At the end of August, we're going to have that loan off our balance sheet. So now I'm left with what is truly a loan, which is the $50,000, let's say unforgiven portion. And then we'll just account for this now like a regular loan. So you'll accrue interest and make payments, etc. And then on your profit and loss statement, it will show that forgiveness portion down below the line so that when your tax accountant is preparing your tax return, it won't be kind of embedded up in these income accounts. So it's very clearly marked that this is below your operating income, and there's a really clear descriptor of what that is. So that's just a high-level recommendation for how to track these funds. I do think that it's going to be very cumbersome to try and move your actual expenses out of the new bank account, simply because there's so many expenses that come out of your payroll, et cetera, that are not qualified expenses. So even if you're paying all those payrolls out of a new account, you're still going to have this kind of manual workaround process. So I think it's easier just to keep everything out of your primary operating account and then do this transfer process just to sort of track things. So hopefully you found this useful. If you have any questions, please reach out and I will help you in any way I can. I know this has been kind of a confusing time for everyone, so happy to be a resource if I can help. My cell phone number is 210-885-6198 if you would like to give me a call, and I look forward to hearing from you. Thank you.